Today is D-Day for the South African Reserve Bank's highly anticipated decision on interest rates. With inflation well below the midpoint, many are waiting to see if the MPC will opt for a cautious 25 basis point cut or a bolder 50 basis point cut. Well, let's find out what Sanlam Investments economist Patrick Buthelezi expects. Patrick, thank you so much for your time this morning. We saw inflation come down quite significantly in 2024 to 3% in December, and this is surely a positive indication for an interest rate cut.
Well, definitely it is. Inflation is very low. It's at the bottom of the target range, and also core inflation remains very low at around 3.6%. And monetary policy stance is still restrictive. So, and in the scope for the Reserve Bank to cut is wide open. And also given the fact that inflation is now drifting higher, I think it is time for the Reserve Bank to cut. But I think at this stage, they will continue to cut very cautiously by another 25 basis points, so allowing themselves that scope to respond, given heightened level of uncertainty in the world.
Now, what do you believe the MPC sees as those upside risks to inflation? You talked about the global uncertainty, which could lead them to be more hawkish or cautious, i.e. by not cutting by more, like by 50 basis points. We also saw the US Fed last night deciding on an unchanged rate.
Yeah, I think the big risk is the currency. I think that the currency could weaken, so there's that risk that because of proposed policy to tax imports, so in the US, so I think that policy could cause the currency to weaken. But the reason why the currency could weaken because the Fed might change and start hiking, especially if those policies are implemented aggressively.